Small wins feel innocent at first. They feel earned. They feel like progress. That first quick profit hits the nervous system harder than any lesson ever could. The mind remembers it. The body remembers it. You didn't wait long. You didn't suffer much. Yet you were rewarded. That is where the damage begins. Small wins teach the brain the wrong lesson. They tell you that speed is skill. They tell you that activity equals intelligence. You start believing that being in the market is the same as being effective. Each small win lowers your tolerance for stillness. You begin to itch when you are not in a trade. Silence starts to feel like danger. You check charts not for clarity, but for permission. Permission to act. Permission to feel something again. The market becomes emotional stimulation instead of a battlefield. You stop waiting for quality. You start manufacturing reasons. You justify mediocre setups because the last few trades worked. That's how addiction forms. Not through losses, but through comfort. Small wins soften your discipline. They make rules feel optional. They convince you that consistency comes from frequency. But mastery is built on refusal, not participation. Every small win chips away at your patience. You begin to expect reward on demand. You become intolerant of slow development. When a trade doesn't move immediately, anxiety creeps in. You watch every tick. You question every decision. You exit early not because the setup failed, but because your nervous system can't handle waiting. That impatience didn't come from nowhere. It was trained. Traders who chase small wins slowly lose the ability to sit through discomfort. They want confirmation fast. They want validation now. Big opportunities don't offer that. So when the real move starts, you don't trust it. You scale out too early. You protect profits that were never at risk. And later, you watch price continue without you. That pain is sharper than a loss. Small wins also inflate ego quietly. They make you believe you understand the market when you've only been spared by it. You stop respecting risk. You loosen stops. You increase size without increasing patience. The market notices. Eventually the rhythm changes. Volatility shifts. Your small edges vanish. Now the habits remain, but the rewards don't. You trade more to fix it. You force more setups. You dig deeper. This is how traders bleed. Not in one dramatic collapse, but in slow emotional erosion. Mastery feels boring to the undisciplined mind. It requires saying no repeatedly. It requires watching others profit while you do nothing. Small wins steal your ability to endure that. They don't teach you how to wait. They teach you how to crave. And a trader who craves is already compromised. Big trends don't announce themselves. They don't arrive with excitement or urgency. They develop quietly, often while most traders are distracted chasing movement. They reward patience, not effort. Patience is misunderstood. It's not passive. It's not lazy. It's restraint under pressure. Waiting through uncertainty hurts, not because nothing is happening, but because your mind demands action. It wants reassurance. It wants control. Big trends deny you both. They ask you to sit with doubt, to hold positions while nothing confirms your belief, to tolerate being early, sometimes for longer than feels reasonable. Most traders can't do that. They enter correctly, then sabotage themselves with impatience. They exit on noise. They take profits to calm their nerves, not because the move is finished. The market keeps going. Big trends don't reward those who predict. They reward those who endure. Endurance is uncomfortable. It forces you to confront fear without reacting. It exposes how badly you want. Certainty. Every pullback tests your self-control. Every pause triggers imagination. You start seeing threats that aren't real. This is where patience separates professionals from participants. Small fluctuations mean nothing inside a major move, but to an impatient mind, every fluctuation feels like danger. So you manage the trade to death. You adjust stops constantly. You interfere with what doesn't need interference. Big trends require trust, not blind faith, but trust in process, trust in preparation. That trust only exists if you've practiced waiting. The market doesn't care how long you've waited. It moves when it moves. Your job is not to force timing. Your job is to remain ready. Big trends forgive late entries. They punish weak holds. You can enter imperfectly and still succeed if your patience is strong. You can enter perfectly and still fail if your patience is weak. That is the paradox most traders refuse to accept. Patience protects you from yourself. It keeps you from reacting to every emotion. It keeps you aligned with the larger picture. Without patience, you trade noise and call it opportunity. Big trends are rare. That rarity is why they pay. If they were easy to hold, everyone would hold them. The mind rebels against inactivity. It invents reasons to act. It convinces you that doing something is better than doing nothing. That lie costs more than any single loss. Waiting feels like falling behind. In reality, it's positioning. Every hour you don't trade impulsively, your clarity improves, your standards rise, your emotional volatility drops. Big trends reward calm. They expand in environments where others are anxious. The patient trader feels disconnected from the crowd. That isolation is not weakness, it's alignment. You don't need many trades. You need the right ones, and the right ones demand that you can sit in silence without trying to escape eye. Overtrading rarely feels like fear. It feels like confidence. It feels like engagement, like ambition, like hunger. Beneath it there is anxiety, the fear of missing out, the fear of being inactive, the fear that if you don't act now, you'll be left behind. So you trade, not because the setup is strong, but because silence is uncomfortable. Overtrading is not aggression, it is nervous energy looking for release. You click to calm the mind. You enter to escape uncertainty. You exit to relieve tension. Each trade becomes emotional regulation. At first, nothing seems wrong. You're busy. You're involved, but busyness hides insecurity. When you overtrade, you stop choosing. You start reacting. Every movement looks like opportunity. Every candle invites opinion. You lose your filter. That filter is discipline. Overtrading creates the illusion of control. If you're in the market, you feel connected. If you're flat, you feel exposed. So you stay in. You justify it with logic, market conditions, momentum, experience. But the truth is simpler. You're afraid to wait. Waiting forces reflection. Reflection exposes doubt. Doubt feels dangerous, so you trade to avoid it. Losses from overtrading don't feel clean. They feel messy, confusing. You can't clearly explain why you entered. You can't clearly explain why you exited. Those losses damage confidence far more than planned ones. Overtrading also dulls awareness. Your mind becomes noisy. Your judgment becomes rushed. You stop seeing the bigger structure. You focus on ticks instead of direction. Fatigue sets in. Emotion bleeds into decision-making. Now even good setups feel stressful. You hesitate. You second-guess. Overtrading didn't increase opportunity. It reduced capacity. The market didn't overwhelm you. You overwhelmed yourself. Real confidence comes from selectivity, from knowing when not to trade, that kind of confidence. CE is quiet. It doesn't need action to prove itself. Overtrading seeks validation. It wants constant confirmation that you belong. But the market never confirms belonging. It only tests discipline. The trader who can sit through active markets without acting is not missing out. They are preserving strength. Every trade should cost something. Attention, focus, emotional energy. When you overtrade, you spend without budgeting. Eventually the account reflects what the mind has already lost. Fear doesn't always scream. Sometimes it stays busy. Losses are inevitable. They are part of the profession. They are the price of participation. A clean loss teaches. It sharpens awareness. It humbles without destroying. But repeating the same mistake is different. The first loss costs money. The second costs confidence. The third costs integrity. At that point, it is no longer tuition. It is ego refusing to learn. Most traders don't blow accounts from one bad decision. They bleed from repeating familiar errors. They know the rule. They break it anyway. And each time, something inside them hardens. They stop listening to themselves. They stop respecting risk. They start believing exceptions are earned. This is arrogance disguised as experience. The market does not negotiate. It enforces. When you ignore a lesson, it repeats it louder, with more volatility, with more consequence. Losses that come from discipline hurt differently. They sting, but they don't linger. Losses that come from arrogance stay. They echo, they haunt. You replay them. You justify them. You lie about them, not to others, to yourself. That self-deception is the real damage. You begin to rationalize behavior you once condemned. You move stops because this time is different. You add size to recover pride. Pride is expensive. Every repeated mistake weakens self-trust. You stop believing your own rules matter. Without self-trust, discipline collapses. You hesitate on good trades. You rush bad ones. The market senses nothing, but your results reveal everything. Arrogance isn't loud at first. It whispers entitlement. I deserve this win. I've been right lately. I know better now. That voice feels calm. It feels reasonable, until it isn't. True learning requires humility. It requires admitting that pain came from choice, not chance. Most traders avoid that admission. It hurts too much, so they blame conditions. They blame volatility. They blame timing. Anything but themselves. But growth only happens where accountability lives. A trader who respects losses becomes sharper. A trader who excuses them becomes fragile. Fragile traders break under pressure. The market doesn't punish arrogance out of spite. It exposes it because arrogance ignores reality. Reality always wins. Discipline is rarely exciting. It doesn't feel powerful. It doesn't feel heroic. It feels dull. It feels like sitting on your hands while the market moves without you. It feels like watching others celebrate while you do nothing. Most traders say they want discipline. What they actually want is comfort. Discipline demands sacrifice, not of money, but of stimulation. Choosing boredom over excitement feels like self-denial. The mind rebels against it. It looks for reasons to act. Boredom exposes restlessness. Restlessness exposes weakness. That is why most traders avoid it. Excitement feels productive. It creates stories. It creates momentum. But excitement clouds judgment. Disciplined trading feels empty at times. There is space. There is quiet. In that quiet, doubts grow louder. You start questioning your process. You start questioning yourself. That discomfort is the price. Discipline is choosing to stay uncomfortable without seeking relief. Boredom is not the absence of opportunity. It is the absence of noise. Noise is addictive. Charts flashing, orders filling. The nervous system gets used to it. It starts craving intensity. Discipline starves that craving. You don't get rewarded immediately for doing nothing. There is no feedback, no applause, just restraint. The disciplined trader learns to trust silence, to trust preparation, to trust that opportunity doesn't disappear because you didn't chase it. Excitement trades pay emotionally, then charge interest financially. Boredom trades cost emotionally, then pay financially. Most traders can't make that trade-off. They need to feel involved. They need to feel smart. They need to feel active. Discipline strips all that away. It leaves only process, only rules, only patience. That simplicity is uncomfortable. There is nowhere to hide. When you're bored and flat, there is no one to blame, no trade to analyze, no position to defend. Just you and your discipline. That confrontation is harder than any loss. Excitement distracts from fear. Boredom exposes it. So traders chase movement to avoid themselves. The market doesn't reward distraction. Discipline is not restrictive. It is protective. It protects you from emotional decisions, from impulsive entries, from unnecessary damage. The trader who embraces boredom builds resilience. They become selective. They become calm. Calm doesn't feel like winning. It feels like nothing, and that nothing is where consistency lives. The market doesn't attack you. It doesn't target you. It doesn't remember you. It simply responds. What you feel as pressure is exposure. Exposure of impatience. Exposure of fear. Exposure of ego. The market acts as a mirror. Cold, unemotional. It shows you exactly where you are weak. When price moves fast and you panic, that panic was already inside you. When price stalls and you get restless, that restlessness didn't come from the chart. It came from you. Traders blame volatility because it's easier than confronting insecurity. They blame manipulation because it protects pride. But the market is not personal. Your reaction is. Every emotional response reveals something unresolved. The urge to chase, the need to be right, the refusal to wait. Those impulses don't originate on the screen. They live in the mind. The market only activates them. A disciplined trader experiences the same price movement as everyone else. The difference is internal. Where one reacts, another observes. Where one panics, another pauses. The chart didn't change. The mind did. Most traders believe control comes from prediction. They want certainty. They want guarantees. The market offers none. That lack of control terrifies the unprepared mind. So it tries to dominate. It trades more. It forces outcomes. That force creates resistance. That resistance creates losses. Then the blame begins. But the market didn't cause the emotional collapse. It revealed it. Weak discipline gets exposed in fast markets. Weak patience gets exposed in slow markets. There is no environment where weakness hides forever. Every excuse delays growth. Every justification reinforces the problem. Self-responsibility is uncomfortable. It removes all external villains. There is no one to fight, no one to outsmart, only habits to confront. The market doesn't demand perfection. It demands honesty. Honesty about limits. Honesty about emotional capacity. Most traders ignore their own signals. Fatigue, frustration, overconfidence. They keep trading anyway. The market responds with consequences. Those consequences feel unfair to the undisciplined mind. They feel random. They aren't. They are feedback. Every loss carries information. Not about price, about behavior. Until behavior changes, results won't. The trader who understands this stops fighting the market. They start managing themselves. That FT is uncomfortable. It removes excuses, but it creates stability. The market will always be uncertain. Your response doesn't have to be.